Is Bitcoin heading to $140,000 or higher? Experts weigh in on market trends, on-chain data, and what it means for your crypto investments. Find out what indicators you should be watching and why alt season might be just around the corner. In the latest video from Altcoin Daily, Larry Leard, author of The Big Print, discusses Bitcoin's potential price surge. He predicts Bitcoin reaching $140,000 by the end of the year, possibly even $200,000. He bases this on factors like continued monetary debasement and the potential for a mass-scale Gresham's Law-like event, where people move from fiat currencies to gold and Bitcoin. He discusses the current economic landscape, including record-high gold prices and rising bond yields, as indicators of a system on the brink. Leard mentions Bitcoin's power law model, suggesting a price of $326,000 in 5 years, with a potential upside of $667,000. He also touches on the stablecoin bill, viewing it as a positive step toward wider crypto adoption. He encourages viewers to acquire Bitcoin, emphasizing its scarcity and potential for future growth. Based on recent news, the U.S. Treasury's borrowing needs have significantly increased. This rising national debt could fuel inflation and further weaken the dollar. Leard's prediction about a move away from fiat currency towards Bitcoin and gold aligns with this trend. His point about Bitcoin's fixed supply amidst growing monetary expansion makes it an attractive hedge against inflation, a narrative increasingly discussed in financial news. However, it's worth noting that Bitcoin's price is still highly volatile and predictions should be taken with caution. The market is complex, and various factors can influence price movements, making it difficult to predict the future with absolute certainty. In the latest video from Crypto Rover, Bitcoin's price action suggests a potential bull trap, resembling previous market patterns. Despite a slight dip due to potential tariffs, Bitcoin bounced back from its upward sloping support line, breaking above its previous high. On-chain data indicates a lack of significant selling pressure. Crypto Rover predicts a substantial price surge to $130,000 to $140,000. He advises caution and suggests the uptrend line is a key level to watch, below which a bearish outlook might be warranted. Negative funding rates indicate a potential short squeeze, while growing futures open interest hints at further upside. BlackRock's push for an Ethereum staking ETF could boost Ethereum's price. Crypto Rover also highlights significant inflows into Bitcoin ETFs, over $45 billion in 1.5 years, alongside outflows from gold ETFs, suggesting a shift in investor preference. He concludes by mentioning the MVRV Z-score, indicating Bitcoin is not yet overvalued, and recommends a previous video on altcoin season timing. Recent news supports Crypto Rover's observations about institutional interest in Bitcoin. For example, several articles discuss BlackRock's filing for a spot Bitcoin ETF and the potential implications for the market. The increasing institutional adoption adds to the narrative of Bitcoin as a maturing asset class. However, the regulatory landscape remains uncertain, and the SEC's decision on the ETF will be a major catalyst for the market, one way or another. It's interesting how traditional assets like gold are seeing outflows while Bitcoin sees inflows. It reflects a changing investment landscape and perhaps a shift in how investors view safe haven assets. In the latest video from Lark Davis, he discusses the potential start of altcoin season. He points out that while Bitcoin has hit new all-time highs, altcoins haven't seen the same boom as in previous cycles. He examines on-chain signals like falling USDT dominance, suggesting money is flowing back into riskier assets. He also notes the total crypto market cap, excluding Bitcoin and stablecoins, is climbing, indicating funds are staying within the crypto ecosystem. Lark mentions a golden cross on the Total 2 chart, total market cap excluding Bitcoin, a rare signal that preceded the last major altcoin season. He also discusses rising Ethereum open interest alongside flat Ether prices, suggesting smart money is accumulating positions, while emphasizing that past performance isn't indicative of future results. Lark combines these signals to build a case for a potential altcoin surge. He also mentions BitUnix as a trading platform and offers a bonus to new signups using his link, a $400 bonus on a $2,000 deposit plus $2,000 in trading bonuses. Lark Davis's analysis is interesting, and it's true that several indicators he mentioned seem to align with a potential altcoin surge. Recent news articles about increased institutional interest in crypto also seem to support this idea. However, the market remains volatile, and macroeconomic factors, such as inflation and interest rate hikes, could still negatively impact crypto prices. It's crucial to conduct thorough research and manage risk appropriately before investing in any cryptocurrency. In the latest video from Coin Bureau, Nick explains 5 on-chain indicators to improve crypto investing. These include daily active addresses, which show real-time demand and can reveal price manipulation. Total value locked TVL, reflecting a project's liquidity and potential growth. Best viewed in crypto terms, not just dollars. Stablecoin supply, important for understanding market liquidity and buying power. The stablecoin supply ratio, offering insights into short-term buying power. Exchange balances, which can indicate market vol. Exchange balances, which can indicate market vol. Market vol? What exchange vol are we at? What all zero molly going? Messages, which can indicate market vol, more like a little bit. The stable coin site, suggesting bullishness and percentage of holders and profit, useful for gauging market sentiment and potential selling pressure. He mentions resources like Etherscan, Swisscan, CoinGecko, Difflama, L2Beat, Glassnode, CryptoQuant, Whale Alerts on X, formerly Twitter. He suggests combining on-chain analysis with technical and fundamental analysis. He encourages viewers to explore additional resources linked in the description. After researching recent news on on-chain analysis, it's clear that this type of data is becoming increasingly important for crypto investors. Articles highlight how on-chain metrics can provide deeper insights into market trends and individual project performance, going beyond simple price charts. It's interesting to see how sophisticated investors are using these tools to identify potential opportunities and manage risks. The emphasis on combining on-chain data with other forms of analysis, like technical and fundamental analysis, also seems to be a recurring theme.